Right, let's get cracking. So we're a uranium development company with assets in Western Australia and the Northern Territory, soon to be Westralia and another country. We've just refreshed our DFS, which has significantly improved the economics of the project, and we have state, federal environmental approvals, and I'll talk about these in a lot more detail, obviously. We have a very good team. We've all built mines before, including BC Iron. And we have a uranium marketing expert over in America, Scott Hyman, who's been working in uranium marketing for 30 years, and he's a real key asset to our company. Our CapEx funding, we often get asked about this. Because uranium is a contracted sales business, it's all hedged. That would mean that we could gear higher and have lower dilution when we're building this project, and that's a really important aspect of this kind of business. And then KPMG has just joined us to help us bring in strategic partners. Uranium is a strategic metal around the world for power, and we're looking forward to working with KPMG on that. So what have we been up to? We just recently announced the DFS refresh. We announced that all of our state government approvals are now done, and that KPMG has joined the partnership process. Coming up, we will be making some announcement on some ore sorting technology that we've done at the Northern Territory project, Alligator River exploration update, and hopefully this year, certainly into next year, we'll be announcing that we've secured uranium contracts and moving towards funding. So we are moving the project towards mining. That is our goal, and it's the best way to build sustainable value for shareholders, is to be in production. So the projects, where are they? Mulga Rock is in Western Australia, 240 k's east of Kalgoorlie in the Great Victoria Desert. Unlike Andy's fantastic photograph of British Columbia, this is just very flat and very uninspiring country, but a great place to build a mine. 90 million pound resource, it's one of the largest in Australia, with 42 million pounds in ore reserves. And the DFS has a $605 million Australian NPV at US $55 a pound. I'll talk a bit more about this in detail. The Alligator River project is in Arnhem Land in the Northern Territory. It is a very underexplored area of world-class uranium deposits, including Jabiluka and Ranger. And we have a deposit up there called Angularly, which is a 1.3% uranium project. And we have multiple walk-up targets, which is ideal for a partner who would want to come in and JV with us, and that's something we're working on. So the Mulga Rock project, as I said, out past Kalgoorlie on the Tropicana Haul Road. We've got all of our mining leases. We've got two mining areas. We call them Mulga Rock East, Mulga Rock West, and a huge bore field. Sorry about that. I'll just keep talking about this. These deposits are old paleo channels. They're actually loose gravels and sands full of organic material, so that's a typical drill hole there. And you can see the very sharp boundary between the waste and the ore. That's really important for us. We have very good grade control in terms of mining it. The uranium is very simple metallurgically. There's no complex minerals, and this is all free dig, so there's no drilling and blasting required. And how do we know that? Well, we dug a couple of test pits during the DFS, and you can see them in the photograph there. It is free digging, as I said, highly selective. And you can see in the picture on the lower left-hand side, the demarcation between the black ore zone and the overburden. It's really quite simple. So that's one of the test pits that we dug, just showing you how simple it is. Those pits are still open, great geotechnical assets there. And we hope to have a much bigger pit in a not too distant future. That's our plant. Very simple process, acid leach and then resin and pulp. So resin and pulp is no different than carbon and pulp in gold. And what we basically do is wash that white sand out of the ore. We end up with this organic sludge that we then introduce to a sulfuric acid leach. We go into an ion exchange, and then basically we strip the uranium off those resin beads, and then we package it and sell it as yellow cake. It's a really simple process. Very low risk, and we have done proof of concept through test pits and a pilot plant that was done during the DFS. The Alligator River project in the Northern Territory, there are 3 areas in the world that have world-class unconformity style uranium deposits. Kazakhstan, which anyone who is into uranium, remotely interested in uranium will have heard about. The Athabasca Basin, some of the world's largest and richest deposits. And then the Alligator River project, province, which is up in the Northern Territory. Part of it's in Kakadu, obviously off limits, and the other part is in Arnhem Land, which is completely on limits. So this includes some big deposits like Jabiluka, 350 million pounds, and Ranger. So there are some world-class monsters up there, and that's why we're interested in it. This is the Alligator River province. Our projects are in, I think it's green, that color there, being colorblind geologist here. And just to put it into context, this is the same tenement package overlaying on the Athabasca Basin. So these blue tenements are Cameco, the biggest uranium company in the world, and that's our tenements sitting in the Athabasca Basin, just to show you the sheer scale of these deposits, 80 kilometers north to south. And the Angularly deposit, which is the one I was speaking about, just sitting in there, and we have several other prospects in that area. The reason we like this is it's very unexplored because of uranium politics in Australia. It's had no modern exploration. The Angularity deposit, I mean, look at the size of it. It's not even 1 million tons, but about 26 million pounds. So it's a really small little nugget. You could literally mine that in about 14 months. So the scoping study that we put out, we showed that you could mine it part-time over a 4-year period and have a 9-year metallurgical plant life, and the OPEX would be on the first quartile of the all-in sustaining cost curve. This is a target-rich environment, ready to drill, and as I'll talk about later on, we're looking for joint venture partners for this particular project right now. I mean, one of the options is you get Mulga Rock up and running, get some cash flow, and then drill it, but we'd like to have 2 phases going. Now, the refresh was just announced. The NPV's gone up by 14% to 605 million Australian, with an IRR of 31%. The capital cost at 393. We've dropped that by $100 million and a payback of 2.4 years. And these are the really important things, the operating costs. The all-in sustaining operating cost for years 1 to 5, because that's when we're into the high-grade material, is $28 a pound. And that's very low in the uranium world. It's competitive with the Kazakh operations, and it does have a long mine life, plus our pipeline of projects makes it really attractive to utilities. These are just some waterfall charts. We'll have this online, and obviously in the chart you can have a look at it in a bit more detail. This is the all-in cost curve for uranium this year, and what I want to show you is this is Trade Tech, who's one of the main price reporters. This is their price for what they think the price needs to be sustainably, about $44 to sustain production without profit, so that would be an all-in sustaining cost. And that's our all-in sustaining cost there. And one thing I really want to highlight here is this is currently what we're burning in the world, 180 million, just over 170 million pounds, and this is what we're currently mining. So there's a massive supply gap. Now, because the uranium that's being burnt in today's reactors was mined 3 or 4 years ago, the supply gap will not manifest until 22, 23, but the utilities will start writing those contracts later this year and early next year. So for uranium, the time really is now. Sensitivities as well, very insensitive to the operating capital costs, are very insensitive to changes in costs, and it's moderately sensitive to price and uranium price. And again, have a look at this, come around and have a look in the booth. This is the consensus outlook for uranium, and that's our break-even price. So that is at $36.65. The NPV for the project is 0, so every dollar after that we make money. We would like to get $55 as a weighted average contract price. That'll obviously be a lot of different contracts, probably 10 to 20 at different prices, but 55 is what we're aiming for. At 65, this project's $1 billion, so there are some people who think the price will go that high. In terms of implementing the project, right now we've finished the DFS, going from left to right. The secondary approvals, which are the government environmental management plans, are done. Uranium offtake, we're hoping to secure offtake later half of this year and into next year. If that occurs, we can then move into FID and financing. So this is the key for us, is the uranium offtake, and that's something that we can't control. The U.S. reactors they have their own mines, but we are certainly in front of them all the time, and having Scott in the States to do that, be in their face and remind them of who we are, has really paid dividends, because we had a chat to a utility the other day who referred to the Big Five, and then we're next. So we get a lot of feedback when we put RFPs or requests for proposals in. We know where we sit in the pecking order, and we're very high up in it, so it gives us a lot of confidence we'll move the project forward From FID to construction is 2 years, and first production we're aiming for the latter half of 23. It's a pretty aggressive timeline, and as I said, make no bones about it, it depends on the uranium offtake contracts. So in terms of what we've been doing, state government approval, we are only one of 4 in WA who now have the environmental approvals and will probably get underway. The other 3 mines being Cameco's Tuma operations and Toro. We have federal EPBC approval, very important. We have all of our tenure, so all of the mining leases that we need for life of mine. We have our Aboriginal Heritage Management Plan. We have state secondary environmental approvals. We are the only one, as I say, in WA to have those, and we need to get our building, our mining, our safety, and our export licenses, and that's basically done at the bureaucratic level. There are no ministerial approvals required for this. We're through that process, and so we are moving towards mining. In terms of our team, most of you would know most of the people on this slide. Cheryl Edwards is our chairman. Tony Chamberlain was our COO and is now on the board. As we didn't move ahead at the end of the DFS, Tony moved on, ironically, to BC Iron, or BCI Minerals. And Julian Tapp, one of our key guys, he does our approvals. He's an absolute wizard at it. Without Julian, we'd certainly be a lot further behind than we currently are. And then Scott Hyman is our guy in the States, 30 years in industry experience. And one thing about the nuclear industry in America, it's a very small industry and no one moves. So he goes and talks to people he worked with 30 years ago. And then Marcel, one of the best CFOs I've ever worked with due respect to the other ones, but very strategic, a great right-hand man to have. And Xavier Moreau, who anyone who has worked in mining in Western Australia would know, very, very knowledgeable uranium geologist, been in Western Australia for a long time. His accent's thicker than mine, but what he doesn't know about uranium isn't worth knowing. And just a bit about the company, we'll skip past that. And then finally, I just want to leave you with this commodity price performance year to date. Gold's obviously had a flyer. The base metals are here. Uranium, when COVID hit, that was all COVID. That's a spot market, so it's a speculator's market, so a couple of mines closed. And then it just drifted away because the catalyst had disappeared. And basically, this is just what we call a carry trade. This is just trade between traders, so it's drifted off a bit, but still at 22%. And just because I love sticking boots in, that's lithium. So if we have nuclear reactors, we don't need batteries, I'm afraid. So thanks very much. Why Vimy? We're the most advanced uranium project, largest advanced project in Western Australia. We are ahead of the curve with our team and our uranium sales in a first world jurisdiction, and I can't underestimate, or I can't underline enough that a first world jurisdiction is really important to the US utilities. And as I said earlier, consumption in 2020 is at 180 million pounds, and mining is at 120. So there is a shortage coming. And I have to read this, I'm afraid. The lawyer said I had to read it. So do you mind if I... No, I'm kidding.
We've got afternoon tea, but you can read it. It's okay.